Welcome, everybody. This is our 2 cents on your dollars with the Strategic Insights Financial Planning Group.
Guest speakers and their companies on this podcast are not affiliated with or endorsed by LPL Financial.
We have Leo Chain, Alexis Villarreal, James Credo, and myself, James Enriquez. And today, we want to talk about the elephant in the room.
Ooh.
The F word.
Oh.
Fees.
Oh, okay.
Yeah.
Okay.
Not fleas.
That's exactly what
Fees.
I thought he was going to say.
Okay.
Right. Did you really?
Yes.
Well, it's probably because I told you ahead of time.
On a Friday?
Yeah. We want to talk about fees and services.
Right.
Okay. Buzzword. Fee only. What does that mean?
Fee only.
Yeah.
Like a flat fee.
Okay.
Yeah. Not an asset management fee.
Okay.
For all services. Or is it for specific?
You know what? You bring up an interesting point. Let's
Yeah.
start from the very. How do you get paid?
Woo!
Yeah.
Maybe that's a good place to start.
Yeah.
Me, myself?
All right. Fine. Since you went there.
Yeah.
A financial advisor in your current role, how do they get paid?
Thanks for laying the floor out for me, James. A couple of different ways. So when working with clients, what's nice is having some flexibility where we can offer different services in different formats, and the client can pay for those services and formats differently. And we've thrown out the D word again, depends, right? But for everybody, we have multiple options. We still do have a commissionable type of pay structure where clients are paying a commission for a transaction. So client calls the office, they have a brokerage account, they want to buy Apple. The cost of purchasing Apple will charge the client a commission. That commission is paid to us as the advisor. And in our circumstance, a part of that commission is also paid to the broker dealer. We also provide our advisory fee type model as well. The advisory fee structure works in the sense as far as we would charge a percentage of your total assets that we manage. So a client has the option of paying a percentage-based fee for the total dollar amount in the account that is with us as the advisory firm. So if a client has, let's just say, $1 million account, they're paying 1%. Us as the financial planning practice would receive roughly about $10,000 for the year for our services of managing that account. So that's another way of us charging for a fee, and that is one of the bigger, more frequent, consistent ways that we do receive our fees. And the other format that we do utilize is our planning fee. So we do have clients where they don't have any assets with us at all. They just utilize us for planning purposes as a resource, someone to help provide some guidance, someone to help provide some strategies, things like that to help with different scenarios. We come across this for business owners quite a bit, estate planning situations, things like that, where we can provide some insights and some ideas and strategies, guide them, help them through their process, and then charge them a specific dollar fee, dollar amount for executing and providing them with those plans. And then now we're also including and implementing some flat fee services as well for the services that we provide. But what I do like is the capabilities and flexibilities to be able to charge for certain things for certain individuals, and do so where we are a business, so we have to generate revenue, but we also want to be able to do that fair and equitably for clients, and we know that over time we want to make sure we're providing the value, and what you're paying for is worth that value.
Okay. He mentioned commissions.
Yeah.
Uh,
Dirty word.
I was gonna say, aren't there online sites where you can do that commission free?
For trading?
Yeah.
Yep. Absolutely. Yep.
Okay. So why wouldn't I do it online?
I really think it depends on the person, and I think everyone has to be honest with themselves. Pretty much everything in the world you can do for free.
Well, not for free. You
Yeah.
can do it yourself.
You can do it yourself.
There's a cost to
You can-
something.
there's no cost, but you have to be honest with yourself and sit down and are you achieving your objectives? You know, and there's some people that it doesn't matter what the results are, as long as they're doing it for free and the lowest possible cost, they're happy. And if for the most part, if they're kind of reaching their goals, it's not optimal, they're fine. It's great. We have a lot of avenues. There's a lot of options in the world. But there's some people that they need guidance, whether it's from a person over the phone or person face to face. They need that some guidance. And whenever you involve another human being, the costs start to go up. But you have to assess, are you better off doing it yourself for free? Or have you been able to accomplish more, or at least have been more efficient with your time to work on other things that is more important to you because you've paid more to hire a person or a team?
That's why I always feel like time, right? Time is
Right.
what the cost is. And they don't understand that by saying, oh, I can do it myself and do this and that. Are they going to do the research? Are they going to do the due diligence of figuring out when to buy, what to buy, how to buy?
Yeah.
I think that is the biggest lie that people tell themselves, right? They're not honest. And I think the people that do come and ask for advice, they're just experienced enough in knowing that, hey, I don't know everything, and I'm better off asking somebody else that knows a little bit more about this subject matter.
Yeah, because I've tried this with my own friends, right? Because in working with my friends, everybody's different, but working with my friends, I felt kind of guilty, charging. And then I also kind of had a notion in my head, all right, these are 10 years ago, these are younger guys. They probably want to go online. And so if they need me, they'll call me and ask for my input. And then they start sharing with me, what's been happening to their finances, and what they've been doing. And it's like, yeah, you should have just paid someone,
That's why I charge my friends more.
Yeah.
So
An advisor one time told me something, and he goes, do you cut your grass?
Yeah.
And I told him, yeah, I cut my grass. I find it therapeutic exercise or whatever. He goes, you're better off making phone calls, right? If it's more cost efficient for you to make phone calls, right? You're better. It just depends, right? I think on the services, but for me, if there's a service, that I'm not 100% sure on, right? I'd rather hand it off to somebody else because I feel like they're gonna do a better job.
The old saying, right? Costs matter in the absence of value. That's one thing that I've always kind of thought when clients start to question or ask about fees and structure and why am I paying for this? Why am I paying for that? And I always go back to that in the sense of, well, if you feel like what I'm providing is valuable for you, then the fees don't matter as much. They still are important, and I think there's a level of transparency in our industry that people tiptoe around when it comes to fees, and it shouldn't. We're a profitable business, trying to grow, trying to earn a living for our families and things like that. And people understand that, especially our business owners, right? So I always reiterate to them, our fees, we feel like are very important, and we continue to try to be as transparent as possible with them. But if you feel like the value I'm providing is not worth the fee you're paying, then that's something we can discuss, and that's something I think that I think is great about having the flexibility to make those adjustments.
Okay, but when thinking about commissions, what value are you providing if you're just placing trades at a higher commission than online?
I'm a believer that there's very little that we provide if that's all the client wants. If the client is like, hey, I just want, like, I like to buy, XYZ ETF, and I'll trade it. I want to buy it here, I'll sell it here. I want to buy NVIDIA here and sell it here. And that's all I want, James. I don't need you for anything else. I will point them in the direction of a Schwab, whatever online company.
Yeah, the problem is it's never just that's all I'm going to do. And I think that's why as financial advisors, we've tried different ways and we've tried to be flexible with pricing. At least maybe in our practice and the prospects and clientele that we have, it's never just, James, I'm going to just open this account, buy Apple, and I know I'm paying a little bit more or a lot more than just doing it for free. But they still prefer it that way because they prefer having conversations on other topics that come up. And they're actually kind of getting a bargain especially when I first started and I had those kind of situations. Hey, I'm just gonna, buy this stock. That's it. I don't really need anything. And then you're young and you're trying to grow your business and help as many people. So you say yes. But when you really think about it, you actually start to lose money because it's rarely those people that want a advisor, a person that works in a physical office. It's rarely just, hey, buy this stock. Oh, by the way, my 401k, how should I invest it? Oh, I need some life insurance. Mm-hmm. And now you've only been compensated on this trading because that was the original deal that you've had. So it never is just one thing in my experience. It always leads to other financial planning questions. And we've tried different pricing approaches, but it always leads back to most people, at least the ones that come to us, they want to be able to ask any question at any time about anything. And it makes it very difficult to kind of just use one pricing schedule,
So are you saying in those scenarios, you're still answering the 401k questions without charging them anything?
Yeah, because I'm not good at, I don't know if it's financial advisors or just our industry, but I'm not good at going, oh, you're going to a topic that is outside of the fee that you're paying me. You paid me to do a life insurance analysis. Now we're going to education planning. That's another $500, Mr. Mrs. I'm not good at making that transition. So my preference as a practitioner, if possible, which is one pricing schedule if possible, just to keep it simple. Because even the dirty word commissions, for example, like life insurance, right? So I've tried it where, Mr. and Mrs. Klein, I'm just going to charge you a flat fee. Let's say, I don't know, $500 to do a life insurance analysis. And let's say, I don't want to be a commission guy. So I'm just giving you the analysis. You can take this analysis and get a life insurance quote from a life insurance agent. It's just not a good experience. So now the client has to take my analysis, get a quote somewhere else for the sake of me saying, I don't do commission-based products. Mm-hmm. It's a terrible experience. All of them usually come back with, well, can you just run the quote, James? You know what I mean?
Yeah.
All for the sake of saying, I don't do commissions.
Right.
You know?
Right.
I always feel like commissions are okay if I'm doing some sort of research for it. I felt like at the beginning, I used to do some research on individual stocks. If I charge them a commission, not a big deal. If they called me with they want to buy a stock, I would try to discount it to as low as possible. I do a lot of life insurance, so I always feel like those things are worth, there's some work that's involved in it. So I don't have a problem charging them. But I think when clients come to me and they start asking questions about fees or comments about commissions, things like that, you realize that that's, a concern of theirs. And so I would try to take the approach of my job is to save you money, protect you, and make you money, right? And so in this process, when they're asking about different ways that they can pay us, right, I'm going to try to give them the one that's going to be the most cost efficient for them. if they're asking for advice, then we try to go to something that at least makes sense for the time that we're going to be giving to them. If they don't need a lot of advice, they're just kind of that simple. I just need to buy this. We're going to go the lowest cost option, and whenever they're ready, because I feel like a lot of times they're just not ready for that deep dive. They just need to get started, and they got other things going on. But commissions aren't bad. They're just they need to be in the right context.
Yeah. Where do you think that idea came from, or how everybody's gotten so not scared, but
Turned off.
Marketing.
about fees? Okay.
Marketing.
Marketing from where? Where's that coming from?
I think it
And
comes
what
from.
is what is the marketing message?
I think the marketing message that you hear is fees are bad all the time, right? And I think you hear it from these either online trading platforms or these low-cost mutual fund companies or low-cost ETF companies, and they're essentially just doing a money grab. And they're still charging fees. They're just charging it in ways that they don't maybe either understand, or they're just charging lower fees, and they're just not offering anything. So it's, again, there's just all sorts of different avenues that it's being marketed, and people just they don't understand what the actual product is. It's just no fees.
So you look at some of those online companies, they'll have access to a certified financial planner for a subscription fee.
Right.
I believe that a lot of that conversation is around keeping your expense ratios low, and that expense ratios for actively managed mutual funds tend to underperform. And so I think sometimes those things get conflated by clients.
Mm-hmm.
Yeah, you're talking about commissions for investments and then like insurance, and it's all under the umbrella of commissions. And then that's in the consumer. That's all they hear. Commissions are bad. Commissions
Right.
are bad. But in practice, that's nothing's ever just 100% true. So
Yeah.
yeah,
What's interesting about what you were saying earlier about commissions
yes,
is that if you go online and do it for free, you don't have anybody to ask like, hey, how should I invest my 401k? So yeah, you might pay a higher commission with us, which you're telling me right now you're
Right.
not going to have any questions, but you're more than likely going to ask me a question or two.
yeah. Here's for example. This is I thought it was a simple, basic, fundamental thing when you're trading. So during the pandemic, I was kind of surprised that trading became so popular again, because I thought that was old news. But people staying at home, not much to do, trading became a thing. And I was so surprised a year or two after, just talking to friends, that they didn't even know what benchmarking was. So cool, you're trading for free. Yeah, more power to you. It's your money. You should manage it the way you want to. I've always thought, how would you know how you're doing as a trader if you're not even benchmarking it to the most boring investment in the world, the S&P 500? And even that, nobody told you about, and that's your world. You're trading for free. So it just kind of blew my mind, because I thought that was one of the basic things you should do is, how are you doing against a diversified portfolio that's just passive?
I think people are just having fun, right? I thought it was funny that people were buying and selling things.
They
and
were
didn't
having
understand the rules.
They were having fun till they got 1099 the next year, and they realized what tax implications were hitting them for that fun trading that they were doing at that point in time. Because that's another big part of it, is the tax aspect of placing those trades. You have a huge short-term capital gain, which is now considered ordinary income, that they were doing back and forth. And then, oh, look at, hey, yeah, I had a really cool trading year. I made, $25,000. Like, oh yeah, well now you have to pay 22% on that $25,000 because you didn't realize, what the implications were for placing those trades.
I think the funnier one is when they're doing all these transactions and don't understanding that you can't buy and sell the same stock within a certain time frame. And so they're creating all these transactions, and some of them have no fees or low fees, and they're not really doing anything other than just creating fees. And they don't even know they're doing that because they see the stock going up and down, and they think they're making money. And it's just interesting.
I mean, going back to the S&P 500 too, right? I mean, you'll read all the time, most people should just hold the S&P 500, low cost, the returns are there, it's diversified from a US perspective. But I don't maybe it's just in my practice or people that I've met. I don't know many people that have at least $1 million
Just
that are comfortable putting it all in the S&P 500 because the returns are there and it's low cost. I mean, it might be different in other parts of the country, but I just don't have that many people,
Mhm.
you know. So
Yeah, I think people want a diversified portfolio.
Right.
They might not be able to say they want a diversified
Right.
portfolio, but they want it. And I think
Yeah.
for the most part, people understand that
Right.
diversified portfolio is going to underperform
yeah,
the S&P 500,
right,
and as long as they beat cash, they're okay.
yeah,
But I really do think all this part of it probably be. We'll have a different podcast on portfolio construction and
Right.
returns and all that good stuff.
yeah. We probably should step back a little bit too and just talk about again the different ways.
Right.
Yeah,
The other comment I wanted to make about commissions, and I wanted to hear y'all's opinion, is so we're not immune to all the noise that's out there, right? I kind of bought into the whole low fee thing. And I found myself in some situations where, hey, you know what, you're probably fine with just an S&P 500 ETF. Just keep your fees low. But to your point about having a diversified portfolio, then it's time to rebalance the portfolio. And I'm like, well, I'm going to generate some commissions if I rebalance this portfolio. So what do I do here? How do y'all address that, or how do y'all view that? Or have y'all run into that situation?
At the end of the day, my perspective is this truly in the best interest for the client? So like we go back to having our philosophy, our process, our practice management, and if there's a required rebalance, and I know that that's part of my process, and I know it is truly what I believe as far as best interest for the client, then I have no issues, generating that commission and making the client aware as far as what the commission generated is. But I think that goes back to that level of transparency at the front end and having good communication with the client as far as them understanding, hey, you're choosing to be in this brokerage account. At some point in time, we're not just going to own that one ETF forever. It just never happens. So if we have to sell out of it and we have to purchase something else, there's going to be a cost to do that. And so I think laying that groundwork out in the front end, and then understanding that your process is what your process is and sticking to it and knowing that it's best interest, I don't have a problem. I don't have a problem with doing that.
Yeah, and it probably wasn't the right question. When I think about it from that view, that perspective, I think, you know what, maybe it would be better in just an AUM fee, an asset under management fee. So then I'm not really worried about that.
Right.
Uh,
I would probably make that recommendation in the front end anyways,
Yeah.
Like, hey, long term, we're going to probably be, from a cost aspect, we're probably going to be in a better situation where you're just paying a management fee. We don't even have to, there's no contemplating, that doesn't even come into your decision making, because now for you as the advisor, the costs are now weighing on your decision making as far as what's the right thing to do for the client.
yeah,
And when you have a portfolio where it's just you're paying a flat management fee, you can then rebalance, exchange, do things within the portfolio. There's no ancillary effects from a fee perspective to doing anything like that. And so I like letting the clients know, hey, one, when we have an asset management fee, it's based off a percentage. We have skin in the game because the larger your portfolio grows,
Right.
the more we're getting paid because it's a percentage of your total portfolio. If your commission, our benefit and the more we get paid is going to be based on the amount of trades you're placing and the amount of trades we're executing. And so to take all of that away, that conflict of interest completely away, having that asset management structure allows the planner, the advisor to really stick to their process and make recommendations and rebalance and do things without having to worry about an extra cost or an extra fee or anything like that.
I always tell them at the beginning that it might be more cost effective to start off with some sort of simple investment and try to get it to grow, so that way commissions are lower than an ongoing management fee. Once it gets to a certain size, that's when I tell them I think it's to be more cost efficient to switch over to an asset management fee, so that way we're not having these large commissions for having to rebalance portfolios. Just always trying to make it cost affordable.
Okay, so going back to your original idea of cost is only an issue in the absence of value. So what do you do to add value for the fee that you're paying? Is it just managing the assets? Is it more than that?
Yeah, it is, and that's what I think differentiates our practice in a lot of circumstances and aspects, because I think we do a good job and continue to grow and evolve of doing this, of making clients aware of the things that they're not aware of. And so that's one of the things that I feel like from a service perspective is, hey, you're paying, this is one of the examples I give. You're paying for a buffet, right? Don't just eat the salad bar. Like, we have other menu items available. And so when we talk about fees and we talk about fee structure, the thing I mentioned to clients is you're paying for a service fee. You're not just, in a lot of circumstances, you're not just paying for the asset management. You're also paying for some planning advice. You're also paying for asset protection. You're paying for, in depending on the circumstance, maybe college savings. But that service that we're providing can be included in our total management fee. Now, there are clients who are like, hey, I don't want any of those services. I just want you to manage the portfolio, which is fine. And that goes along with that transparency on the front end of working with clients and having them have a better understanding as far as what their expectations are, what their needs are, what our expectations are working with clients as well too, what we're going to provide, making sure that we're helping from the asset management side, making sure that we're helping with rebalancing, making sure that we're helping with non-qualified accounts, with help with tax savings, whether that be at the end of the year, individuals have to work and deal with different tax scenarios for their non-qualified accounts. So we may be doing some tax loss harvesting, reporting, making sure that that's reported properly. All sorts of things that go along and coincide with not just the asset management, but all the ancillary things that go along with that. We want to make sure that clients understand that, hey, there's moving parts and there's other things that need to be done along with not just the portfolio construction, but with the other things as well too. And so I love having that flexibility. I love saying, hey, if you just want us to do this, great, we can do that. Hey, we can also provide you all these other services. The fee will include that. But if you don't want to utilize that, that's completely up to you. But we want to make sure the clients are fully aware of what those services are and what they're paying for.
So are you saying at your restaurant you can order from the menu? You don't have to buy the buffet?
Yeah, you don't have to purchase the entire buffet. That's where we were talking about just paying for a plan, right? If hey, I'm a new business owner. I need help with determining the proper entity structure I need, and then, figuring out. I need to figure out my compensation. I need to figure out my wife's compensation. I need to figure out the whatever benefits, things like that. Can you help me do that? Yeah, of course. That's a one-time thing. Them getting their business set up and structured and things like that. Here's a flat fee. I'll help you walk through that entire process. And I may never see the person ever again, but that's their choice, right? We can provide a service that does that for an individual.
Yeah, I like having the options, but in practice, I haven't seen it utilized as much. And like I said earlier, I just never see a situation where you stick to, at least I stick to just that one topic. I'm terrible, and so I do prefer as much as I can, one fee schedule, and we'll give you everything based on your pace. What do you want to take care of first? But in my scenario, I think to make it work and be efficient and run a business that can still make money and grow, you're gonna have to price out people.
Yeah,
and it's actually kind of tough for me to say, because when I first started, a lot more idealistic. I want to help everybody, but you just can't. and not everybody wants to be helped either, because they want to do it for free, and so you have to make a decision.
You said that a lot
Yeah.
smoother and calmer than I thought you were going to say that, by the way. For sure.
He's grown in just these 20 minutes.
Aged
Just
a
right-
lot though.
just right in
30
this
days.
Okay, so you mentioned earlier you gave the
Yeah, he
example
did.
of $1 million, $10,000 in fees. What do you get for that?
What do you normally provide for a client like that typically?
So I think like anything, each client has different scenarios that they're going through. So we're going to curtail it to whatever it is that's important to them. And first things that we're going to go through is a deep dive into what's important to them and figure out what their goals are, what they're trying to accomplish with that $1 million. Is it to spend, pass on to their spouse, pass on to their kids? And once we kind of do a deep dive in figuring out what's important to them, then we start implementing different policy, procedures for them, right? If it's towards the end of life, we look at maybe doing things, tax strategies to be able to basically do what they're asking for in a more efficient manner. And so I think as years change, right, that service that they're paying for, that fee, right, our advice changes. So as taxes changes, right, they have that constant change. They already know that we're in tune with all the different laws, different changes that are happening. And so we're going to be able to adjust their portfolios or adjust the planning to whatever it is that they're doing without having to go, hey, you need to pay us again this year. Or, hey, next year you need to pay us again for these fees. Just to do that advice. We're just going to naturally just do it for them because of the fact that they're paying for it, right? They're paying for us to provide things that they don't even know that they need. So.
Yeah, it's funny because I can identify with your comment that it's hard to stay in just one lane.
Yeah.
Mm-hmm.
However, I feel like last couple of years I've had more people that they know they're good,
Right.
but they just want to know, hey, when should I file for Social Security?
Mm.
So I do think there's scenarios where you can stay in that one lane and charge a project planning fee
Right.
just for that. Doesn't have to be the full blown financial plan
Right.
and charge thousands of dollars.
There's
But
one-offs. Right?
What? I
I
don't.
that's a lot.
I don't. Right. I don't think
Yeah.
it's a one-off anymore. You know
Yeah.
what I'm saying?
Yeah.
There's just so much information out there. There's so much software. I've had plenty of people tell me that
Yeah.
they're on their 401k
Yeah.
and the 401k tells them what they need to do and blah blah, but they really don't understand it completely. It's good enough right now because I'm super far and I can't afford to save anymore anyway. But I would at some point like to understand it a little bit more. Is the comment I hear a lot, and so I don't think they're really that one off.
I mean, that's kind of good news. Maybe AI hasn't been, up to speed as much as we thought. I think there's still not a perfect software, which is good. There's not one place you can go still where you feel 100% confident that the software is correct.
But there's still inputs involved, right? And as long as
Yeah.
there's humans involved, there's always going to be some error.
Yeah, that's right. Because from a human perspective, your situation is always unique, and you're having to run scenarios,
Mm-hmm.
and sometimes it requires 2 or 3 softwares, and not all of them are a firm where you're doing free trading. And sometimes you have to go to an independent advisor, and yes, they're going to be more expensive. Yeah.
Yeah, and I want to dive deeper in another episode about that topic,
Yeah.
About software and that financial planning is not software.
Right.
There's still much
Right.
more to it.
Yep.
But about going to an independent advisor still. I'm sure y'all seen all that literature. A bunch of different places put a different number on it, but the value of an advisor,
Yeah.
some places have put it up to 3% per year. So if I'm paying 1% in AUM, but an advisor's adding 3% value, back out that 1%, you're still up
Net.
to right.
Yeah.
So I don't know. What do y'all think? Is that worth the fee in those situations?
I mean, people get in their own way, right? Constantly. So a lot of those studies are people overthinking, doing too much, sometimes not doing enough, right? And in those scenarios, there's such an emotional aspect to what they're doing. Every single time they're making these decisions, they know the financial impact and how that affects them emotionally, how that affects, you know, their children or their family and things like that. And so working with a professional allows that to kind of be cut out, because we're going to make those decisions for you in your best interest, along with our philosophy and our strategy of how to execute that. And so, yeah, I think that's why those studies showed, you know, significant deviation in regards to performance based upon utilizing an advisor and doing it yourself. That emotional aspect and that factor plays a huge part. And we have evidence of how much it is, like, you know, close to 2-3% difference.
I think that asset management fee also includes therapy sessions, because I feel like that's what it ends up boiling down to. Talking people off the edge, right? Talking them from doing something that's going to hurt them.
Yeah.
And it really goes back to, right, knowing their situation, knowing what they're really trying to do, and explaining to them that the route they're going is the opposite direction of what they're trying to do. And so that's what that fee really does.
So I used to think that was condescending fluff that we used to say, but I think experiences taught me that there's some real value in that.
There is value in there.
Yeah.
100%.
All it takes is one big mistake of not making the right decision based on what the market's doing.
Or worse
And-
is when you see them, they call you back and say, I should have listened. I got a big tax bill because I did this.
Yeah. So
Okay. Well, I appreciate y'all's candidness about fees. That's a tough subject. We could say a lot more and go a lot deeper, and hopefully we can in one-on-one conversations. But for right now, that's our 2 cents on your dollars.
The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. There is no assurance that the techniques and strategies discussed are suitable for all investors or will yield positive outcomes. The purchase of certain securities may be required to affect some of the strategies. Investing involves risks, including possible loss of principal.